Most people who aren't yet homeowners believe they need a 20% down payment before they can buy a house, and that belief is keeping a lot of qualified buyers on the sideline waiting for their cash to accumulate, but meanwhile home prices generally continue to trend upward over the long run. Let me show you what the real figures and possibilities look like. But before I continue, if you're interested in real estate content specific to the Collin County area, please like and subscribe to our channel so you don't miss the rest of the Buyer's Playbook series or any of the other content that we release regularly. Today I'm breaking down the actual cash that you need to buy a home in North Texas, not just the down payment, but everything, so that you can plan accordingly, stop guessing, and know exactly where you stand before you start the process. And let's start with the down payment, because this is where most of the confusion seems to live. The conventional loan with 20% down is the version most people picture. On McKinney's current average home value of $491,000, 20% is approximately $98,200, and that's a significant number. But 20% is not a requirement, it's actually just one option among several. Conventional loans are available with little as 3% down for first-time buyers and 5% for repeat buyers in most cases. 3% on $491,000 is roughly $14,700, and 5% is about $24,550. Those numbers are significantly lower than the $98,200 we talked about earlier, the 20%. So buyers who believe they can't afford to buy, maybe they can. FHA loans require 3.5% down with a credit score of 580 or above. But if your score is between 500 and 579, it's still available, but the minimum down payment is going to be about 10%. FHA loans carry mortgage insurance, which I'll get to in a moment, but they do open the door to buyers who need a lower entry point. VA loans for eligible veterans and active duty military require zero down. Zero. If you have VA eligibility and you aren't using it, please talk to a lender before you do anything else. It's one of the most valuable benefits available to those who qualify. And then there's USDA loans available for buyers looking in more rural areas, and they also require zero down for qualifying buyers. Parts of Collin County actually do have USDA eligible zones depending on exactly where you're looking, so it's worth checking with a lender. Now let's talk about mortgage insurance. On a conventional loan with less than 20% down, you'll pay private mortgage insurance, also called PMI. PMI typically runs between 0.5 and 1.5% of your loan amount annually, and it gets divided across your monthly payments. So on a $450,000 loan, that's roughly $190 to $560 added to your payment. The exact cost depends on your loan amount, your credit score, and your down payment percentage. But the PMI isn't permanent, because once you reach 20% equity in your home, you can actually request to have it removed. It's a cost of entry with a lower down payment, but not a lifetime sentence. FHA loans carry mortgage insurance for the life of the loan in most cases, which is one reason buyers who qualify for conventional loans typically use conventional. But if FHA is what gets you into a home, it's certainly a legitimate option. Now let's talk about closing costs, because this is the number that surprises buyers most often. In Texas, buyers can expect closing costs to run between 2 and 3% of the purchase price. On the currently average priced home in Collin County, that's roughly $9,800 to $14,700 on top of your down payment. And here's what that money is going towards. Lender fees include the origination charge for processing and underwriting your loan. This varies by lender, but typically runs between 0 and 1% of the loan amount. Some lenders advertise no origination fees, but price that cost into the rate instead. Compare the full picture, not just one number. The appraisal is paid up front during the process and typically runs between $500 and $700 in this market. The lender requires it to confirm the property is worth what you're paying for it. Title insurance in Texas is regulated but varies based on purchase price. On a $491,000 purchase, title insurance generally runs around $2,500 to $3,000. This is a one-time cost that protects your ownership for as long as you own the home. Prepaids are often misunderstood. These aren't fees you're losing. You'll prepay a portion of your homeowner's insurance at closing, typically the first year's premium. You'll prepay interest from your closing date through the end of the month. And if your lender escrows taxes and insurance, you'll fund those initial reserves at closing as well. Property taxes in Collin County generally run in the range of 2 to 2.5% of the assessed value annually, depending on the city and the school district. That's a number that buyers relocating from lower tax states consistently underestimate. One piece of good news in this market: sellers' paid closing costs are negotiable. With more than 30% of Texas listings sitting with price reductions as of March 2026, according to Redfin, many sellers are motivated and open to contributing towards closing costs as part of the deal. A well-structured offer might include this. Now let's talk about reserves, because lenders generally want to see cash remaining in your account after you close. Having 2 to 3 months of mortgage payments and reserves after closing is a reasonable expectation from most lenders. On a payment of $24.50 a month, that's roughly $4,900 to $73.50 you need to leave untouched at closing. So you don't want to go buy a new car when you're dealing with lenders, especially if you have your pre-approval in hand but haven't closed on the home yet. Beyond that, budget for your first 90 days of ownership. Moving costs and any immediate repairs, window treatments, and appliances if the home doesn't include them. Expect to spend something in the first few months, and just plan for it rather than being caught off guard. So that's a lot of numbers, so let me put the full picture together for you. Let's say you're buying an average priced home at $491,000 with 5% down on a conventional loan. Your down payment is roughly $24,550, closing costs at 2.5% are approximately $12,275, and reserves of 2 months are roughly $2,500 per month, and add another $5,000. Total cash needed to close and maintain reserves is in the range of $42,000 to $44,000. That's a very different number from the 20%, which is $98,200. And if the seller contributes toward closing costs, your out-of-pocket figure comes down even further. I'm not suggesting you put down 5% if you can put down 20%. A larger down payment means a lower monthly payment, lower PMI costs, and less interest paid over the life of the loan. But I am telling you that 20% is not the line between you and home ownership. It's just one option among several. The buyers who move with confidence are the ones who know their actual numbers before they start looking. Once you know what you need, you can plan for it and act decisively when the right home comes up. If you want to walk through the specific numbers for your situation and the price range you're working with, visit us at dnj.realty/contact. Let's make sure you have the complete picture before you start. I'm David Hughey with D&J Realty Group in McKinney, Texas. I hope to see you next time in part 3 of the Buyer's Playbook.